Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, November the 15th, 2012. We'll be looking at the U.S. markets today, the longer-term chart. So we're looking at a couple of years here. Each one of these candlesticks represents a single week of trading activity. That means today's, or actually this particular week right here, hasn't finished because we haven't gone through Friday's trading activity. So right now you can see it's looking very bearish, a continuous signal to the downside. However, if on Friday we would actually see a bounce up here and kind of find some support there, that could actually indicate that you've actually found a little area to bounce off of, and you can start to rally there for a little bit. It's just a bounce, but it's something to think about. You can analyze it at that point. The main thing I want to show you guys on all these charts is something that we've talked about for a while. When we broke this major uptrend line, we told you should be looking for a bearish sell opportunity. That was a great sell here, and then we've just kind of followed it all the way down here. Now we're watching for a potential bounce here for a couple different indication reasons. Number one being what I'm seeing here on the chart. You look at this low point here and this low point I currently have here. It's trending up in this little bullish pattern right there. At the corresponding time period on the ultimate oscillator, you got this low point here and this lower low here pointing down. So have here is an indication that calls for a bounce. It's one of four different types of bearish divergences, and this one's calling for a bounce to the upside. However, a bounce does not mean a trend change, and in fact I would be trusting the momentum indicator here telling you what's really going to happen will be an ultimate takeout of this low point here at the 12,000 level. So I've already talked about that, been talking about that for a while. That's how I was able to tell you guys a long time ago when we were breaking down that I see a 1,000-point slide coming. So this is what's developing here, but you can get a bounce in this scenario. I've been looking for some resistance, and depends how it plays out, but you can have a resistance at the 50-period moving average here, the middle Bollinger Band line right just above that point where you had a previous sell signal right here, and that's what I'm actually expecting. So once that bounce does take to effect and starts to get some play behind it, start looking for a pretty nice sized one there. But there's something you should know. Whenever you look at this overall longer-term chart, you'll notice that, and I've talked about this before, you've got this little first shoulder formation, the head formation rolls down, and if we were to get a bounce and come up here and fail and roll over, we'd be forming a very large head and shoulders formation. So that would be telling you to look for a bigger move to the downside to come. We would simply take this low point here, and wherever the low point would be at that point, we don't know yet, but let's say that it was to come up next week or to bounce, something like that. When we have a low point here, we have measured the distance out from the high point of the head down to the neckline, then subtract that from the time that we actually break out of that neckline, then gives us some idea how low we can fall before we get some kind of a bounce back activity. Okay, so what happens if we don't bounce next week or the end of this week, and we just go ahead and slide right through this support line here, this previous low? It's possible, being the news that's still out there, we're still waiting on what the U.S. government's going to do regarding the fiscal cliff, and as long as that is an unknown, it's kind of hard to argue in favor of a rally to the upside. That's why we're just not seeing that right now. We're selling off substantially on the short-term charts, and it's really difficult to drive a rally or a bounce to the upside with that knowledge hanging over your head. So what happens if we just continue to sell off and actually take this out? Nothing changes. All you would have is a low point here, a lower low here. The trend line would then be like this. You would eventually, at some point, you will get a bounce. That bounce doesn't have to be equal to the previous high. All it has to do is bounce a little bit and give you still, you have the first shoulder formation, the head formation, and the second shoulder formation rolling over. Give us a bigger sell signal. We just measure the distance to the neckline, subtract from the breakout point, tells us how low we expect price to go at that point in time. So it's really important to see how it plays out, but right now you want to stay, of course, on the short side and don't be trying to call a bottom in this market. We'll clean this up right quick. Is there any scenario where we don't get a head and shoulders formation, really bearish signal to the downside? Sure. If you can take out this high, that's what you have to do at this point in time, and that's a real long shot, and given everything that we have going on in the markets in Europe, as well as the fact that we have the fiscal cliff that we're facing now. So I see it as a long shot, but if you could take out that high, you could actually negate the head and shoulders situation. Otherwise, look for a major move to the downside. As you guys know, whenever I'm looking at the major market charts in the U.S., I like to find some confirmation. I want to make sure that they're all telling me the same thing. If they're not, maybe I'm reading the chart wrong. In this particular case, we're reading it perfectly fine. You can see that we've got this shoulder formation, pulls back down here, bounces, makes a higher high, pulls back down, and now we're flirting with this previous low here. Whether we take it out or don't, this will be, the bounce will be really telling us what happens. If we cannot take out this high on the bounce, then this market's toast, and we're going to be forming a head and shoulders formation like we've seen before, and then we get a crash and it goes much lower. Like we did before, we talk about the high point of the head down to the neckline, measure that distance out from the breakout point, this point right here where it closes below that, and you get an idea of how low you can fall before you get another support line bounce scenario. Okay, so that's basically what's developing here, only this one's much larger. Clean that chart up. Again, it's hard for me to tell you what this particular candlestick is going to be on Friday because today's Thursday. So right now we're looking at the candlestick saying it's very bearish to the downside here, telling us to look for more selling. However, like I said, on Friday you could see some buying activity, which should give us a little wick out of the bottom of this candlestick formation. It could change the candlestick formation altogether, so I can't just tell you that look for more selling next week. I'd rather be doing this video on Friday, but on Friday I do the other video where I go over all 19 major market charts, so I can't be doing that, and this at the same time the video would be like 30 minutes long. So what I would tell you right now is look at the fact that you have had 6 consecutive weeks to the downside, counting from here, 1, 2, 3, you can do the math, 6 of them in a row. That is above average. Anytime you get over 5, you start looking for, eventually, no market falls straight down or goes straight up. Eventually you're going to have a week in the other direction. So that can happen next week. You could start to see a little bit of support and a little bounce there. Be watching that bounce. When that bounce happens, I want to be stopped out of the market. I'm not long, I'm not short the NASDAQ right now, but I am short several of the other markets. So I want to be stopped out of that when we see that bounce, but I want to be looking for another short opportunity as well. So, keep up to date with the videos that I put out every single night. I'll let you guys know when I'm going in and when I'm getting out, but the main thing here is that the overall chart formation pattern is what I wanted to really draw your attention to. We are seeing a very massive head and shoulders formation develop, and that tells us to look for a much greater move to the downside coming. The Russell 2000 Small Cap Index, the same overall story. Nice move here going on. Talking about this before. A big head and shoulders formation developing here, and we've talked about this when it was happening as well. That you also had one back here, and you had another one right here. And these are very effective tools to use whenever you're looking at head and shoulders formations on the chart. That's not something you just want to, I don't worry about it. You better be concerned about it. And if you're long the markets, you definitely want to be protecting yourself. The SPX, or the S&P 500 Large Cap Index, again, same overall story for a shoulder formation. The head shoots higher than the previous high of the shoulder, pulls back down, and now any bounce that we were to get, and I'm expecting one probably next week sometime, assuming we get that one, I would expect it will fail before taking out this high, and that will lock in the head and shoulders formation like this, what you've seen before, would just basically be a little bounce here, would pull up and roll over and start to go lower, and that's what you'd be looking for. You can also do it another way, and that's to get a massive slide here and just take out the previous low and then bounce. That'd actually be more bearish than bullish. And again, the main thing there in that scenario would be that you had sold off so much that the bounce there would not be strong enough. You would not have enough news or anything to actually drive it up here and take out the previous high. So it would be much worse to see that develop, because the odds of the upside breakout would be that much lower. So that would almost be guaranteeing a basic downdraft move to the downside, obviously. And on top of that, anytime the neckline, the low point here to the low point before the next bounce, is sloping down, it's more bearish, telling you that much more trouble ahead. Looking now at the Wilshire 4500, the EMW, you can see same overall chart pattern formed here. We've moved up here, took out the previous high here, giving us the hedge formation. We pulled back down. Currently on Thursday, this candlestick formation currently looks to be telling us to look for more selling, but like I said, Friday's going to be telling us to what this actual candlestick formation ends as. However that ends up, it's going to be telling us whether or not to look for more selling or a bounce the following week. So right now we're still seeing more selling to come here, taking out this low. This is our target. This low point on all the charts is actually what we're expecting to be taken out ultimately. We'll keep an eye on it, but again, this market is in no way, shape, or form so that you want to be buying. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. We keep all the major markets that we track at perfectstockalert.com. 19 of them on the charts are kept there on the website, updated every single night. I recommend you watch them. I actually updated the stop loss limits on several of the U.S. charts as of today, and I will be updating the European charts as well. So check it out. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.